Hi there, welcome to Kneppy Invest. Another week come and gone, and in fact, we're into December, the first day of summer, and in fact, the first day of my least favorite trading month. In particular, I hate the last week or so of December because the market is closed just way too often to my liking, and that continues into the new year. And I really start getting back interested in the market about halfway through January, when we start to see Appendix 4Cs and 5Bs or quarterly reports being released. So for about a month, I'm not that attached to the market because not a lot of stuff is happening. And when I say stuff, I'm talking about announcements. Seems like a lot of companies' management go away on holidays, that sort of thing, and they don't release significant announcements. And that's one of the things I am always looking for every single day when the market is open. So in this particular video, week that was, I'm going to look at some interesting announcements from companies. And also, I think I'm going to be looking at some potential breakouts as well. Now, I won't linger too much on the XJO. This is the daily chart for the XJO, and nothing much has changed. In fact, we can have a look at the weekly. Was it up? Up slightly. In fact, the XJO was up about 0.46%, so nice week. And in fact, the XJO has gone up 3 of the last 5 weeks, and the 2 down weeks have been down by almost zero, just below zero. Anyway, so I'm not going to really linger on the XJO. I can leave that to Sunday's video, which is a technical update, where we will look at, well, I will look at some of the indices, commodities, that sort of thing. Now on to interesting announcements released from ASX companies. Maybe in the future, I will also include companies that are listed on foreign exchanges or international exchanges, but at this point in time, only interested in looking at those announcements from ASX companies. And we're going to start off with Adore Beauty. Not the sort of company, for me, in terms of what they do, because this company is all about beauty products, and I am not a beauty product sort of person. Anyway, Adore Beauty, in fact, let's just have a look at the chart for Adore Beauty before we have a look at what caused a little bit of excitement in this company. So the share price of this company has been in a downtrend for a long time. In fact, I would say the share price of this company has been in a downtrend, from about September 2021. In fact, you could even argue the share price of this company has been in a downtrend since it listed on the ASX back in October 2020. So the share price of Adore Beauty has gone from $7 range all the way down to $1.14. But it does look like potentially the downtrend in this company could be coming to an end. And the share price of Adore Beauty is at really interesting levels right now. If we zoom in a little bit more, we can see the share price hovering the whole week round about the old lows we saw back in August. In fact, the share price is just above those highs, which means Adore Beauty is at almost a 1-year high, 11-month high. So it does look like sentiment in this company is starting to shift. The trend in the share price is starting to go from a downtrend into a possible uptrend. I'd like a little bit more confirmation. So what has caused this little bit of a rally in Adore Beauty's share price? Share price rose 19% on Monday. Well, it was an announcement. Actually, this is the wrong company. So let's have a look. Yes, I'm going to look at Byron Energy later. So Adore Beauty released an announcement called Adore Beauty Response to Media Article. Usually when a company releases that sort of article, just that title, that's typically in relation to potential takeover rumors or takeover rumors. And this was a potential takeover rumor that Adore Beauty management said, no, we don't think this is a fair offer. I'm pretty sure that's what they said. Of a scheme arrangement for $1.25, $1.30. And I'm pretty sure the Adore Beauty board concluded that the proposal undervalues the company, was unable to implement it, and was not in the best interest of shareholders. And that's all it needed for Adore Beauty share price to rally on the Monday. And just being very healthy, what's happening after that? The last 4 trading days, share price has gone sideways. So not a lot of selling has come in, and that's good. I think this is a possible interesting trade going on with Adore Beauty. Now on to Gentrack. a company I've held for a long time. Well, when I say long time, I'm not talking about 10 years. I'm talking about 3 years. And this was a potential turnaround story when I bought. And you can just see what's happened to the share price of Gentrack in the last 4 trading days. In fact, the share price of this company has gone from about $4.75 to $5.90. So just by looking at this chart, we know something really significant and positive has happened to Gentrack this year, or this month, this week. I'll get it right eventually. But if we go back in history, this company's share price, and this company was on the nose back in 2019. Share price of this company fell off a cliff. And then the share price started to go sideways. It went sideways for about 3 years. And I took a position early on in this sideways track. And eventually the share price broke out in December last year. I can't believe it's not that long ago. I thought it was longer than that. Yeah, 1 year ago, the share price of Gentrack broke out on their financial results. You can see the share price rallying late November, early December last year. And that's exactly what's happened this year. The company released their financial results. Let's have a look at these financial results. And I'm pretty sure there was an upgrade in here as well. Gentrack, up another 5.4%. They released their financial results on Tuesday. Let's have a look at the market announcement. And revenue up 34.5%, although there was a one-off somewhere there, $27.6 million one-off revenue. EBITDA, $23.2 million, up $15.1 million from last year. Profit, $10 million profit from a $3.3 million loss, and cash increased by $28 million. They also gave a trading update, upgrade, in fact. Revenue upgraded from between 157 to 160 million, now 170 million. And they've also given us some financial year 24 EBITDA guidance. They expect that to be between 20.5 and 25.5 million. So not that much difference from this year's EBITDA results. So not much growth in EBITDA, but nice growth in revenue. And the market liked it, didn't it? Look at that share price, just rallying 4 days in a row. And even though when I have taken some profits in this company, and last time I took profits, I said, that's it. I'm just going to let this company share price just run as long as it wants to. I'm not going to sell unless I see a shift in my thesis behind buying this company. But I'm looking at the valuation of this company right now. Market cap is getting up to 550 million. And if we have a look at the weekly chart, the share price isn't quite up to the levels it did get back up at the peak in the hype in this company back in 2018. Share price at that point got to $6.80. But the share price of this company is getting back up to those highs we saw back 5 years ago. So a lot of hype in this company right now. And this is what I was looking for back in 2020 or 2021 when I took my position in this company. The share price I bought shares in this company was about $1.25. Yes, so it was a long play for me, maybe too long, and there could be an opportunity cost, but I don't care. It was a good trade, a good holding, whatever you want to call it. Now to another company called Intellicare Holdings. So let's zoom in. And the share price of this company has been in downtrend forever, probably since it's listed, just like Adore Beauty. And this company also listed, I believe, in 2020. A plethora of companies listed in late 2020 and 2021 because the market was absolutely brilliant back then. And unfortunately, most of the share price, or the share price of most of those companies, have gone down a significant amount. Intellicare at one point had a share price of 50 cents. Now it's 2.6 cents. But exciting week for Intellicare shareholders, unless they've been holding since the IPO, because the share price on, I think it was on Tuesday, share price of this company rose 87% in 1 day. We have seen a little bit of selling coming in the last 2 days, which is understandable because share price has been a well-defined downtrend. But the share price did get up to a 1-year high recently. I think that would have been on Wednesday. So what happened? What caused this excitement in Intellicare? This is a SaaS company for retirement village, that sort of thing, I think. Retirement village, maybe not that unique. We can actually have a look at what exactly they do here by looking at the announcement, because most companies, when they do release announcements, do have a little section towards the end about the company. So Intellicare is an ASX listed software as a service technology company in the aged care, disability and health industries. So I was on the sort of right track. And this was in regards to a non-binding MOU. I am not a big fan of MOUs or memorandums of understandings, particularly if they're non-binding. This really does nothing at all for me, but the market liked it. And the market is what really sets the share price higher for the short or medium or even longer term. So the market liked it. Some nice volume coming in on that day, but for me, this does not tickle my fancy at all. Market cap of this company is $5.5 million. Maybe this is just the first signs that these micro caps are starting to turn. The sentiment in these companies is starting to turn a little bit more positive, that the market did react really positively to this announcement when it's just a non-binding MOU. Now onto a company that I did actually like the announcement. I don't necessarily like the company itself. Plenti Group, this is a fintech lender, that sort of thing. Fintech finance. And you can just see the share price in the world of hurt since 2021. Share price got to a high of $1.68, now it's 65 cents. So not as big of a hurt as Intellicare. And I think the main reason may be because this company does have a little bit more oomph behind the business. However, companies within this space have been really hurt over the last few years, and that's understandable. Rising interest rates are going to hurt these sort of companies. But just look at the chart. Well-defined downtrend, then all of a sudden, on Tuesday, 28th of November, share price jumped up 65%, and the share price has kept on going up. And that's a really good sign. Share price rose another 9% on the Wednesday, flat on the Thursday, and looks like another 7.4% on the Friday, up to 65 cents. Recently, it has been as low as 32 cents. So the share price of this company has doubled from the lows. And not only that, you can see there was a nice little base developing in the share price at around 32 cents. It was struggling to fall below that. So for those who did pick up shares in this company at 32 cents, congratulations. If you're still holding, you have doubled your money in this company. So what caused the excitement in Plenti? And why actually I did like it. So the company released the half-year results, and that's not what caused excitement in the market. The company also announced, in fact, I'll just zoom in, company also announced a strategic partnership with NAB, and I liked it. The market liked it. Now, I don't think there would be much numbers in this, so no financial numbers. I typically like those sort of announcements where there are numbers. Someone cynical could say all the benefits of this partnership are almost certainly with NAB, and I probably would listen to that argument. Plenti may not be getting much out of this strategic partnership with NAB, but who knows? I do like it. I went through it. I do like it a little bit. I think this could be beneficial for Plenti, and the market also thinks likewise, with the share price increasing 100% over the last few trading days. So if you own any of these companies, excuse me, and you know a little bit more about these announcements, whether you like it, hate it, or you're ambivalent about it, I'd love to hear your thoughts. So leave those in the comment section of this video. Now on to Byron Energy. So first, we're going to look at the announcement. Now, to be fair, I wasn't that excited about this announcement. So the company released on Tuesday, pretty sure 28th is Tuesday, net daily oil production currently exceeds 2,000 barrels. That's, to be honest with you, that's a ho-hum announcement for me. But I'm not interested in that announcement. I'm interested in the chart for Byron Energy because it's starting to look interesting. So the share price of this company has been a downtrend for over a year. You can see a nice little rally in the share price back in the middle part of 2022. Share price got to a high of 18.5 cents, and then share price moved into a downtrend and fell all the way down to 6.5 cents. But it does look like the sentiment is shifting, and the trend in the share price is shifting as well, and the share price has taken off. I would call this a potential breakout moving forward because the share price at 12 cents, currently 11.5 cents, share price at 12 cents is a 10-month high, almost 11-month high, but a 10-month high. And that is the sort of breakout I'm looking for. Now, ideally, I would like a breakout to coincide with a really good financial announcement. Now, you could say that this particular announcement that the net daily oil production exceeds 2,000 barrels was a positive announcement, but that's not the sort of positive announcement I am actually talking about. But the chart for Byron Energy does look interesting. Market cap of this company, 113 million. It says price earnings ratio 3.8. So maybe this could be a company to do a little bit more research on. Now to a company I own, Collins Food. Actually, I'm trading this because of a positive announcement for the last few months. So I decided to take a trading position in Collins Food. Not necessarily a long-term hold, but Collins Food did release their half-year presentation, half-year results, and a trading update. So let's have a look at the trading update. So I don't care about the half-year results. I care about trading updates. So let's have a look at it. Okay, half-year results. Revenue from continuing operations up 14.3%. Really nice growth here. Underlying EBITDA up 16.7%. Underlying NPAT 28. I'm going to be able to speak better soon. Let's have a look. Let's just calm down. I didn't realize Collins Food would cause so much excitement in me. Underlying NPAT up 28.7%. NPAT of 50.5 million compared with 11 million in half year 23. Net debt reduced to 173 million from 191.1 million, and then a fully franked dividend. And they also go into how they've performed in Australia and Europe, and also Taco Bell. It does look like Taco Bell is turning things around. And then also the outlook, which is the most important part of this particular announcement, in my opinion, because the results are backward looking. They were good. I think they were good, but the outlook is also quite important. And the outlook was actually quite, well, I think it was quite positive. And I think that's why, in fact, they even mentioned here, while Taco Bell continues positive trajectory with same-store sales up 8.7%, we expect consumer pressures to remain high over the coming year. Despite these and various operational headwinds, we remain focused on a sustainable long-term growth plans and continue to invest, blah, blah, blah. So I think there was a lot of positives to come out of these results and this trading update from Collins Food. So how did the market react? And the market reacted just, well, not as I thought it would, but the market reacted really well to these results. Share price on the day rallied 9%. So I bought Collins Food after the positive announcements in June. Share price actually did pull back to a nice little support area at around about $9, and the share price has taken off again. And right now, the share price is at almost a 2-year high for Collins Food. And just by looking at this chart, you can see there has been a shift in sentiment and the trend is now up. A company I have never held, and that company is McPhersons Limited. Share price of this company has been, well, you tell me, just look at this chart. So McPhersons share price back in late 2020 was as high as $3.38. Now it's 44 cents. So the share price of this company has, well, not quite fallen 90%. That would be, if the share price got to 34 cents, that would be a 90% drop in share price. We'll say 85% drop in share price. And this is the definition of a well-defined downtrend. Whenever the share price gets into the above red zone, shaded zone, which is the long-term moving average, the red or the blue line is 150-day moving average. Whenever the share price of McPhersons in the past 2 years has gotten into this red zone, sell. You can see it's got there once, twice, 3, 4, 5, and every single time it got into that red zone, the share price fell away. So those moving average, or that average zone, moving average zone, is a resistance level or zone for this company. And where is the share price of McPhersons right now? Well, actually, it went into that resistance zone on a Tuesday. Share price rallied 28.2% and then it's fallen away. And if I was holding McPhersons shares on Tuesday, I would have sold as soon as the share price got into that zone. But maybe there is a base forming. Maybe there is a base forming. Look at that. The share price is struggling to get below 38 cents. But if it falls below 38 cents, that will be negative. Now, did this company release any positive news to justify why that share price increased? So there was the AGM on the Tuesday. So obviously there must have been something positive in the AGM. And to be honest with you, I have not looked at anything when it comes to McPhersons. I probably should have done this before I started recording this video. So let's have a look at McPhersons. Is there a trading update in these results? Let's have a look. nothing there. Strategic update. Maybe the market likes something in the strategic update. I can't see anything that's obvious. No numbers. I am looking for numbers, by the way. Year to date, for the first months of financial year 24, McPhersons core brands have reported revenues down 3.5% overall, with overall revenues down 7% compared to the same period of financial year 23. We have seen October revenues normalizing now that we have resolved supply chain issues and stock levels, particularly of our core products. What is pleasing to see is that on a moving annual total or MAT basis, our core brands are trading ahead of the category growth rates driven by good marketing and customer plans. So obviously the market did like something within that year-to-date paragraph. And to be honest with you, just by reading it now, without diving any deeper, I can see why maybe the market liked McPhersons AGM. But I have no interest in this company just yet. Market cap 62 million, dividend yield 7.1%. But if you do have a look at the profit of this company, flat, no profit growth whatsoever, low margin. Some years they have a negative profit or loss. Some years they have a nice little profit, like in 2019. 2019, revenue 210 million, profit of 14 million. In the most recent year, revenue 210 million, loss of 5 million. So revenue flat. I'm looking for companies that can grow their revenue over time. Onto a company that I've held and traded. Whoops. I have a delivery. I will have to go right now. Let's start Fisher & Paykel Healthcare again. I actually own a Fisher & Paykel fridge, but that has nothing to do with Fisher & Paykel Healthcare. In fact, if someone was twisting my arm in trying to get what I think about the quality of this company, I would say, maybe with a little bit of hesitation, that Fisher & Paykel Healthcare is a high-quality company on the ASX. And Fisher & Paykel Healthcare released their half-year results on the 29th of November. For the very simple fact that they released this announcement at 7:30 a.m. should tell us straight away that this company is a New Zealand-based company. And the very fact, the other thing is, they released the half-year reports in November, which is another sign that this is a New Zealand-based company. So I've already opened up their half-year report, and this is a company I have traded in the past. I would be willing to hold this company for the longer term if I saw some really good value. Now, the market loved this announcement. So here's the overview of their key results. And I thought this was a really good half year for the company. Nice increase in profit, revenue, hospital operating revenue. Everything was really nice here. Maybe the only thing you could complain about if you were a shareholder was there was only a 3% increase in interim dividend. I don't focus on dividends at all. It's just an added benefit. In fact, if a company's management said to me they're going to suspend dividends because they want to grow, use those funds to grow and become a bigger company in the future, I would fully support that sort of decision because dividends don't come for free. When a share price or company has a dividend of 18 cents, like Fisher & Paykel have, the share price of the company will drop 18%. So you can see that dividend coming out of your capital. That's the way I look at dividends. So I'm not the biggest fan of dividends, but I don't mind the token dividend. So I don't mind companies with a very low dividend yield because I believe those are just token dividends. Anyway, I saw these results and I went, yes, the market is going to react really well to these results. And I would consider myself taking a trading position in this company just based off a potential breakout. So let's have a look whether Fisher & Paykel Healthcare fits into my definition of a breakout. So what I'm looking for is a share price increasing on good volume, and there was nice volume on the day they released their half-year results. Share price increased 7.9%. So a nice increase in share price on financial news. Exactly what I'm looking for. The next thing I'm looking for is at least a 6-month high. And look where the share price was last time it was this high. And we don't have to go back that far. In fact, only August. So the share price right now is at almost a 4-month high for Fisher & Paykel. That does not necessarily preclude me from taking position or trading position in this company, but it does decrease the likelihood of success. That's what it does. The very fact that I consider this to be a high quality company, I think probably increases the chances of success. The price earnings ratio 52.9, dividend yield 1.7, and I think you probably could argue market cap almost 13 billion. You probably could argue maybe overvalued, but that PE ratio could come down a lot if they really ramp up their profits over the next few years. And the share price of this company has been quite volatile in the past few years because they did benefit from COVID-19, and those benefits or those tailwinds turned into headwinds. See, the share price dropped all the way to $16 back in October last year. I did have a trading position in this company as the share price rebounded, and then I sold out of that position when they released some negative news back in May, if I remember correctly. So maybe I could, take another trading position in this company at a share price lower than what I sold back in May. So definitely one to put on your watch list. Another company to put on watch list, without doubt, is 4DX, which is 4DMedical. Look at this beautiful chart. And the share price of this company has been extremely volatile since April. Massive interest in this company in April. Share price actually increased from about 30 cents to a high of $1.24. So a four bagger in about a month. They did a capital raising at near the highs, which is exactly what management should do because this company doesn't have much revenue just yet. And then the interest in this company died away. But interest in 4DMedical has returned. Some really good volume coming in as well. Look at that volume. Look at the volume back in April. Massive volume. The volume just dried away and the volume has returned. We have interest back in this company, and more than likely they won't have to do another capital raising. But let's have a look at what has caused the excitement in this company over the past few weeks. Not just last week, it's the past few weeks. They have released a flurry of price-sensitive announcements going back to the 13th of November. And that was the US CMS approves reimbursement for 4DMedical. I believe that was the initial excitement. Yeah, that was the initial announcement that caused excitement in this company. Share price on that day rose 71%, and that was the catalyst for this renewed interest in the company. So other announcements the company's released, they released a presentation. 4DMedical receives US FDA clearance for CT-LVAS. 4DX signed SaaS contracts to expand into Detroit and Memphis. 4DMedical and Philips signed an MOU. You know my thoughts on MOUs. And they also released a webinar presentation. So this company is just doing all the right things, maintaining interest in the company by releasing good announcements. I won't say absolutely stellar announcements, but the market sees something with 4DMedical. And yeah, it looks beautiful, this chart. If the share price gets to, say, $1.30, that would be a long-term high for this company. So $1.30 would be a 2-year high if it gets there. Now on to LBT, a company I don't know why. Anyway, this has been a disaster the last few years. I have told my story on LBT. So if we look at the weekly chart, I'll tell it again. It was an interesting story. I held this company way back between about 2011 and 2016. And then there was an FDA approval of one of their machines. And the share price in 1 week rose 400%. I took some profits on the way up, and I sold my last shares in this company when it got to about $1. And I think they must have done a share consolidation, because I'm pretty sure the share price of this company did get to $1. And then, the interest in this company fell on the way. In fact, recently, the share price of this company fell all the way down to 0.5 cents. So share price fell from $1 to 0.5 cents. So we're talking about, what's that, a 99.5% decrease in share price over the last 7 years. But something happened in the past week. Not only the past week, look at the massive volume coming in since the 12th of October. Huge volume coming in, particularly when the share price reached this low of 0.4 cents, not 0.5 cents, 0.4 cents. A lot of volume coming in. You might say there's increased volume because the share price is so low, so you can buy more shares. But when you compare the volume to the last year and a half, massive volume coming in. And then all of a sudden, on the 29th of November, so this was on Wednesday, share price of LBT Innovations rose 125%. Share price dropped 28% the next day, but rose 23% today, which is Friday, the 1st of December. So what has caused this excitement in LBT? Let's have a look at this. I was a little bit surprised. So this interest started on the 29th. Was it the 29th? So chair's address to shareholders, CEO presentation, no market sensitive announcements, none. So it was, what was it, the 29th? So the market saw something in the chair's address to shareholders or the CEO presentation. So let's open those up. I haven't had a look at these just yet. And the main reason I didn't have a look at these because they weren't marked price sensitive. So sometimes the share price of a company can increase on a non-market or price sensitive announcement. So there must have been something really interesting in these announcements. So I can't see anything obvious in that. Let's have a look at the presentation. Maybe there'll be some numbers in this. Talking about addressable market, challenges. Why are AstraZeneca interested? Okay. Maybe just the word AstraZeneca caused some interest in the market here. They saw the word AstraZeneca and went, oh, wow, LBT Innovations might be involved with AstraZeneca. Growing sales with exclusive distributor Thermo Fisher. Nice market size. Financial reset complete. Renewed outlook, path to significant value creation. I'll have to wait to see that if it comes true. Okay, so maybe it was just AstraZeneca. Maybe just a little bit of sentiment has shifted in this company. Maybe the share price has just got down to really silly levels. Markup up to $21 million now. And if you did buy at the lows of 0.4 cents, this is a four bagger in the past week. A four bagger in 1 week. Congratulations to those shareholders who bought at 0.4 cents. I probably would never do that. Temple and Webster. So let's have a look at the announcement for Temple and Webster. Pretty sure this was either a trading update or results or AGM. It's one or the other. So AGM. And did they release a trading update? I have a feeling they did. Trading update. That's what I'm looking for here. Here we go, trading update. Trading updates usually found right at the end. And if they're positive, maybe they should put them at the start. The year has started strongly. Okay, great beginning to the trading update. Quarter two or second quarter has seen acceleration of growth with revenue up 42% year on year. So why are people buying more furniture? Who knows? This year, the 4-day period delivered 17.4 million in sales in the Black Friday to Cyber Monday trading period, up 100% on last year. So people starting to buy more furniture. And just by reading, and I already know the result here, just by reading this trading update, you can see why the market got excited. So let's have a look at the market excitement in Temple Webster. Look at that. So share price on that particular day rose 14.4%. The next day rose another 10%. So this is the definition of a breakout. It was trying to break out, a little bit of volatility in the share price. And the last time the share price was this high was back in February 2022. So we're nearly at a two-year high with Temple and Webster. Markup almost $1 billion. Price earnings ratio 123.97. Maybe a little bit too high, but I think there's the main reason people might be invested or want to invest in this company is just the growth, potential growth for Temple and Webster. So this is a company to put on a watch list. Does look like sentiment has shifted, definitely to positive, and the trend in the share price is now up, which can't be said for the next company, PeopleIn Limited. They also had their AGM, and I actually haven't had a look at this. If there was a trading update in here, I can't see any too obvious. But the main reason I want to look at PeopleIn is just to dive in the share price. Just look at that. This is an ugly, ugly looking chart. I had people saying they were interested in buying this company at about $2.50 because they thought there was some good value. The reason they thought there was some good value, if you just look at the weekly chart, and I have to actually press the adjusted here. No, not the adjusted, the auto fit started the screen. There we go. The reason people started to see some value at $2.50 is because that was the lows we saw back in June 2022. But the share price has just tanked it since then, in fact, more than halved. And there's no end in sight to the share price decline. In fact, in the past week, the share price of this company has fallen another 17.8%. And it seems like the share price has really taken a hit on the back of their AGM. Some big volume coming in, not as high as we saw recently, but the share price just keeps on falling. Market cap of this company, 130.6 million. Dividend yield, 11.1%. Price earnings ratio, 7. So obviously the market thinks this company is going to have a disastrous financial year 24, that sort of thing. Will I take a position in this company just based off valuation? Maybe not, because the market hates PeopleIn right now. Now, maybe it's nearing the bottom, but we just don't know at this point in time with PeopleIn. Another company, well, not another company, but a company I do own, Doug Technologies, had a tough week. We saw the share price of this company dive 11% on Wednesday and another 4.3% on the Thursday. Has rallied nicely to 4.2% today on the 1st of December 2023. And I'm really happy it has rallied today because the share price was getting to really interesting levels. Nice little support zone for Doug Technologies. So what caused this sell-off with Doug Technologies? Let's have a log. And this is one reason I will never sell a company shares, but the market thinks differently than I do. So they released an announcement on the 28th, sale of shares. There was also another one, ceasing to be substantial holder. I didn't see that one, but I definitely saw sale of shares. And a lot of investors will panic when they see like a CEO or a founder sell some shares. But again, the CEO, directors, founders sell shares for many different reasons. Taxation reasons, to buy a yacht, to buy property, to diversify their investments. But they only buy for one reason. So that's why I never, and research backs that up. Research shows there's no direct correlation between directors or insiders selling and the medium to long-term performance of the share price of a company. In the short term, there is an effect, as we have seen with Doug, but in the medium to long term, there is no correlation. And the most famous story is one of the Blackmores sold some shares in Blackmores, so the Blackmore family, sold some shares in Blackmores, the company, at $20. This was maybe 5 or so years ago. The share price then went from $20 to $200. The reason he sold some shares was to buy a yacht. And the reason why some people get nervous is they think, well, if they're selling, they must know something that we don't know. Get that thinking out of your head. Sometimes they don't know, as we saw with Blackmore's. Share price went from $20 to $200. Sometimes they just don't know how the market's going to react to anything. Anyway, so we had Matthew Lamont. No, it's actually the sales shares. So here it is. This is the one I want. Okay, so Doug Technology advises that Sheila Lamont, the spouse of co-founder and managing director Matthew Lamont, has sold 2.5 million ordinary shares. Sheila made the sale in order to retire debt. Can you blame this couple for retiring debt? I can't. Why would anyone not do that in the current environment? The shares sold are a small percentage of Matthew and Sheila's holdings in the company. Matthew Lamont regrets the need for the sale, and neither Sheila or himself have any intention to sell further shares in the foreseeable future. Now, there may be other reasons why there was a bit of a sell-off in Doug's shares, but that seems like the major reason. So they released that sale of shares announcement at 4:31 p.m. after trading had finished on the 28th, and then the next day, share price dived, 11%. So that was just panicking, holders panicking because they saw the spouse of the co-founder sell, and they thought, they must know something we don't know. We have to sell. It's silly. Absolutely silly. Aeris Resources did a capital raising. This is a company I held, then I sold because of, sold for some reason. I'm thankful I sold right now. They did a capital raising, and I'm pretty sure this capital raising was at about 11.5, 12 cents. Let's have a look if I was right. I'm thinking 12 cents. A pretty big capital raising, And one of the largest shareholders, if not the largest shareholder, yes, the largest shareholder, Washington H. Soul Patterson. I'll be doing a Neppy's analysis video on Washington H. Soul Patterson in the next few days. I am going away next week, but I'll be able to record videos when I'm going away, going to see my parents. But anyway, Aeris, largest shareholder, is fully supportive of the capital raising. I just wish they were fully supportive of Electro Optics, but that's another story. And the price of this particular capital raising was of 11 cents. I was a little bit off, 11 cents. So we expect the share price, and that was at a 21 to 27% discount, a 27% discount to last closing price. So we expect once shares in this company started trading again, share price should pull back to around 11%, maybe 11.5 to 12 cents. And what has happened? Aeris Resources, 11.5 cents. Has the share price of this company traded at, got down as low as 10.5 cents yesterday, which is the Thursday, but share price around about 11 to 12 cents, which makes sense. So anyway, this could be a very beneficial capital raising for the company. I'm not following Aeris Resources closely right now. They bought a mine from Washington's H. Soul Patterson, and I don't want to be too critical of either party, but this was an amazing sale by Washington H. Soul Patterson, and maybe not the best buy, maybe not the best acquisition by Aeris Resources, because share price of this company has absolutely tanked since that acquisition, and share price in a well-defined downtrend. So this is a copper play. Copper prices last time were rebounding, going nicer, but share price of this company has been absolutely destroyed. So I was holding back in 2021. The share price of this company got to its high, and the share price has fallen for about 90% since then. And it's not ending sight to the share price decreasing, still in a well-defined downtrend. So I see no reason to buy shares in this company just yet. They have to prove to me they are turning things around. 4 more companies to go. Next one, Retail Food Group. Now, this is not an announcement where I was interested in taking a position in the company. Not the sort of announcement that I was getting excited about in terms of the company. It was only an exciting announcement because of who Retail Food Group acquired. Here it is. Presentation, acquisition of Beefy's Pies and debt extension. So this company acquired this iconic beef company, primarily out of Sunshine Coast. I believe they do have maybe 1 or 2 stores in Brisbane, but definitely Sunshine Coast, Gympie, definitely have the potential to expand further. I'm not the biggest fan of plain beef pie stores. I think sometimes they need to be a little more diversified in what they sell, but I do like my beef pies, a little bit too much sometimes. So a really good acquisition in terms of the food. Whether Beefy Pies is a really good company remains to be seen. And to be honest with you, just because of this acquisition, I might be a tiny bit more inclined to buy shares in Retail Food Group, just because I like. So I also like pizzas, and Retail Food Group own Pizza Capers. But this is what disappoints me about Retail Food Group and Pizza Capers. I had 3 Pizza Capers near me within 5-minute drive, and all 3 closed down. And now my closest Pizza Caper store is about 20 to 25 minutes drive away. I have complained about this. Why did you close all 3 stores down at the same time almost? It was a silly move from management. A silly, silly move. All they needed to do was keep one of those stores open, and the business of that store would have increased immensely. Anyway, rant over. Let's have a look at the chart for Retail Food Group. Yeah, nothing much happening. Just one of those announcements because I liked pies. Iress. This company has been a horrible performer recently. They did release a strategy update presentation. I have not had a look at this, but I did hear somewhere else that there was a trading upgrade in this, which would make sense. So strategy update and guidance upgrade. Well, straight away in the title, guidance upgrade. And straight away they give a nice little table, previous guidance, so EBITDA upgrade, exit run update, just an upgrade in regards to EBITDA. And whenever the market sees a profit upgrade, the share price should rally, and it did for Iress. Let's have a look at Iress. Share price for Iress rallied 14.9% and a further 4.7% on the Friday. But this is just not long after they released a very disappointing financial results in August, where the share price dropped 36% and the share price fell all the way down to $5. Share price has recovered almost 50% since that low. Now, when you just look at this chart, you can just see the share price is moving into a potential resistance area, and the share price, last time the share price was at this level wasn't that long ago. We're talking about 3 months ago. So maybe this interest in Iress will turn around, but this is a profit upgrade, the most powerful type of announcement a company can release, and this could be a sign that maybe things are turning positive for Iress. So I will put Iress onto my watch list. I have an everyday watch list, and every single day I will look at these companies and how they are trading. Doesn't necessarily mean I will take positions in those companies. CPM, I know nothing about this, but I have a feeling the share price of this company went up a lot the other day. Up 67% on Thursday. Let's have a look at what this company released. Cooper Metals. Now I remember this one now. It was, sounds interesting, sounds exciting. Brumby Ridge copper discovery confirmed 71 meters at 2.8% copper. I think the main number there is 71 meters and 2.8% copper. That does sound pretty good, and I can see why, without even opening up the document, I can see why the market might get excited. 71 meters at 2.8% copper. Well, yeah, I can definitely understand why the share price rallied. What was it, 70%? Market cap of this company is still about 14.6 million. Share price rallied on the 15th of November. Tried to rally. 15th of November. What happened then? On the 14th of November, I've got my days right. 50 meters at 1.32% intercept. So there was a little bit of excitement there, but now 71 meters at 2.8%. So actually a better announcement than the one on 14th of November. So this is interesting. What was it called? Copper metals. Cooper metals. Just very close to copper metals, but Cooper metals. I'm going to mix that up all the time. And where the share price is now for Cooper metals, the last time the share price was this high was September 2022. We are talking about a 1-year high in Cooper metals. Might have to do a little bit more research on Cooper metals. And finally, we have Electro Optics. Now, so I just actually mentioned Electro Optics, talking about WH Patterson, Washington H. Patterson. So Washington H. Patterson are trying to get some money, a fee for a loan from Electro Optics. There's a little bit of tension here. So you can see 3 announcements in the last 5. EOS update, RU dispute with lender WH Patterson. I'm not sure why WH Patterson are being ridiculous on this. Maybe I'm being a little bit harsh on Washington H. Patterson, but I think they are being ridiculous. But you can see the share price rallied 11.6% for Electro Optics on an announcement in regards to expected revenue for this company. So revenue is expected to be between $210 and $230 million. Market like that. I'm not necessarily in the camp of absolutely liking this announcement. I prefer profit upgrades, EBITDA upgrades. When a company releases any sort of revenue expectations, I just don't know the margins. So the company, Electro Optics, could have increased their revenue a lot on really skinny margins. That does nothing for the financial performance of the company. But things are moving in the right direction, in my opinion, for Electro Optics. So let's have a look at the chart for this company. And definitely the downtrend has come to an end. Share price really not been doing anything over the past, say, 4 months or so. You can even say it's going sideways. But I really would like to see the share price of this company get above $1.25. That would be a good move. Share price was under a little bit of pressure recently, but it does look like this particular announcement has eased that pressure. Anyway, that's what I've got for the week that was. There were way more announcements that were released during the week that I have not covered here. I can't go through every single announcement, but I've gone through some announcements that did tickle my fancy, that did make me take a further look at the company. Some of these other announcements I did not have a look at all. I just left it to this particular video. Maybe that's a mistake. But anyway, If you have any questions about any companies I featured in today's video, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for the video. Have a good day. Bye.